Well, good morning, everybody. It's a pleasure to be here to speak with you all today. There are many reasons why it's nice to be in this building, but for me, it's one of the few places I can go which is actually older than the place where I usually work in Parliament. And this place has been the hub of city life since the Middle Ages. I wonder what the merchants who stood here 600 years ago would have said about how different modern finance looks today. What would they say if we told them their bag of shillings and pence would be replaced by a device that can transfer tens of thousands of pounds across the world in just a few seconds? Because for me, technology brings huge opportunities, and I am instinctively positive about how technology might impact and improve on our lives in the future, notwithstanding the news and developments last night. So today I want to talk about what those opportunities might be and some of the problems I want them to solve. But I also want to talk about the questions and challenges they raise too, and how technology must serve consumers and not the other way around. Now, as Shadow City Minister, I spend as much time as I can here in the Square Mile and beyond, looking at the innovations that have made the UK a world leader. I took the brief in 2016 because of my belief in the strong relationship between financial services and achieving a fair deal for everyone in our society. Now, you will all know that's not necessarily a universal view. The global financial crisis and scandals like the GRG unit in RBS mean that trust in finance and in bankers is very low. It's even lower than it is in some cases for politicians. And much of the discussion around the impact of Brexit and other changes is broadly, well, we might not like what they do, but they do pay us a lot of tax. Now, that needs to change. How easily money can be borrowed and how much it costs is fundamental to well-being. Now, this is a topic especially close to my heart. When I was young, my mum worked for Provident selling door-to-door lending, and so I grew up seeing firsthand the impact access to credit has on people's lives. And I've had constituents, and I'm being entirely genuine and serious here, who have come to me and told me they've tried to kill themselves because of debt. Because they feel they've lost control of their lives, because they've gone from one bad product to another, eventually maybe even ending up dependent on illegal lending. And I've got even more constituents without proper savings, without adequate pensions, and without the resilience that comes with those things when times get tougher. And for too long, disadvantage and privilege have been compounded in our financial sector. In straightforward terms, the wealthier someone is, the cheaper and easier it is for them to access money. And the reverse applies for the most vulnerable. The UK is a very expensive country to be poor in. Poor people pay more for energy, for credit, for transport. So this is why I am very passionate about how new technology could be harnessed to tackle financial exclusion. Big data could bring about better ways of understanding where customers are and use this information in inventive ways. There are already algorithmic engines using AI to power credit scores, helping non-conventional applicants access loans. Experian has partnered with Big Issue Invest, the social investment arm of the Big Issue Group, to create the Rental Exchange Initiative. This takes rental payments data and it feeds it into credit scores. And this would potentially end the situation where those paying tens of thousands of pounds in rent over many years of tenancy cannot use that data as part of their credit history when they try and buy a home of their own. And in addition, there are 1.5 million people in the UK outside the banking system altogether, some by choice, some not. Now, could technology allow us to get to those people? Doreming, for example, allows individuals to shop without access to a bank account. Prepaid cards are helping people better manage their money. In the evidence to the House of Lords Financial Exclusion Committee, MasterCard pointed out that transaction accounts linked to prepaid cards are providing a route into the financial system. Startups such as Pocket, which is sponsored by MasterCard, allow anyone to instantly open a bank account without credit checks. Pocket's research found 6 million Britons have been refused an account by a high street bank in the past 2 years. And transaction accounts also prevent the risk of unintentional overdrafts by simply not having the facility. Another company, SafetyNet, monitors your account and automatically pays in credit when you go overdrawn, typically at a more affordable rate than unauthorized borrowing and protections against penalty fees. Peer-to-peer lending is increasingly filling a gap for SMEs where traditional bank lending is either inaccessible or not the right fit. And innovations such as robo-advice can be used to help people narrow down their choices in the market from which to make more informed decisions. Now, all of this is genuinely exciting and it's important. But beyond filling those particular niches, FinTech could potentially transform the relationship we all have with our finances. We all know the UK's saving culture is currently not what it needs to be, and we're all a little bit guilty of that. But research by the Financial Conduct Authority found that 1 in 6 people could not cope with a £50 rise in their monthly bills. In my view, there have been some policies pursued by the government over the last 8 years that have been a significant cause of that, but that's not the discussion for today. However, no one can deny that these precarious living situations are forcing people into seeking short-term and expensive credit. The big difference I have seen over the last few years is the increase in people accessing credit to manage their monthly living expenses rather than to buy a car or a consumer product. And I commend the work that's already happening to improve this. I recently attended the launch of a new savings scheme at an inner London school called Lifesavers, which helps schools run saving clubs for children to get into the habit of putting money aside from the very beginning. It's run in partnership between Virgin Money, London Mutual and the Church of England all working together. But we need to stage an intervention on the adults too. And technology could be just the nudge that we need. Apps which round up pennies on purchases that go into your savings. Absolutely brilliant. Apps which could use geolocation to sense we're about to waste £3 on a latte and put it into your savings instead. Personally, that's very much what I need. Or apps which budget our money for us and rather depressingly perhaps can work out how much our in-pub spending has outpaced our grocery spending that month and give us some sort of warning. Now, there is clearly a world of exciting opportunities here for industry and policymakers to explore. And that message of the public good that this sector could deliver would be, if I were you, what I was putting at the heart of what I was telling the public about what we're trying to deliver, because I think they will be impressed. But there are also some big challenges for us to address, and I want to talk about 3 of them that come to my mind. They're regulation, future-proofing, and equity, and we'll start with regulation. Financial services are unlike any other sector because you're dealing with people's money. It gives it a unique and special responsibility that brings with it, rightly, higher expectations. It means the stakes are much higher. If your new laptop or smart washing machine goes wrong, that's not good, but the consequences are fairly limited. But if financial innovations fail, the implications for individuals and for the economy could be grave. And there'll always be people saying we should prohibit that innovation as a result. And that's why it's so important to get regulation right. This week I'm writing to the Treasury on the implementation of open banking to ask why account information service providers, the data manager in between the bank and whatever that new service might be, are falling outside of its regulatory scope. It's hard to see an argument against including every link of the chain in that new regulatory infrastructure. And the request for me to do that came from industry, which is unusual, but we've all got an interest in getting this right. And alongside that, there has to be enough flexibility to give a level playing field to challenger brands against incumbents. Initiatives like the FCA's Sandbox, which allows companies to test new products in a live market environment, but which, with safeguards, are a great example, I believe, of how we can strike that balance. We need high barriers to entry to protect the public, but not so high that they block out any possibility of newcomers. And you're going to have to engage with politicians in the political system to make sure that balance is got right. Secondly, while this progress is hugely exciting, we've got to think about the different sorts of challenges it might create in future. Today, the vast majority of young people only want to interact with their banking online. I'm not claiming to be young, but I only go to my bank to pay checks in, and soon that won't be necessary. But what about when millennials turn 80? Will they still feel the same when they have become a different type of customer? What happens in a society without bank branches when the onset of dementia makes online banking very difficult, or even risky, or even impossible? Now, technology can do extraordinary things, and in some cases, online can bring banking services to people who have traditionally found them tough to access. That's particularly transformative in the case of people with disabilities. But I believe it would be a mistake to create a pared-down, stripped-back banking infrastructure just because technology allows it. Technology has to serve consumers, not the other way around. And bank branches are closing at an alarming rate, and yet research shows that talking to someone face-to-face is still a very important part of it for customers. In a survey, 2/3 of consumers expressed that sentiment. And we know that SME lending suffers in areas where branches are shut. And that's why Labour want to make it harder to close bank branches without the proper consultation taking place in those communities. Technology and physical presence have got to be complementary. It would be a mistake to think otherwise. What you don't want is a situation akin to the energy market where you have a small group of people getting great deals subsidized by a larger group of people getting quite poor ones, because that risks creating a backlash. My third and final concern is to make sure that the powerful growth associated with fintech companies is fairly distributed across the whole of the UK, and that the skills that you need to grow are not just found in London and the South East. It is hugely encouraging that there were 30 companies from the UK included in the most recent FinTech City Top 50 rankings, but those companies are overwhelmingly concentrated in London. And this was highlighted by the recent report on the future investment financing conducted for Labour by GFC Economics. A lot more needs to be done to spread that growth and employment throughout the rest of the country. As a North West MP, I have every confidence that Greater Manchester, as one example, could attract and incubate some of the best tech talent. And this is going to become even more important post-Brexit. I know tech companies will go, frankly, where the skills and talent are, but I want to make sure that continues to be the whole of the UK. And it's one of the reasons why I want a Brexit deal which puts jobs and prosperity first, not hardened ideological positions oblivious to reason. And sadly, I do see that from some colleagues in the House of Commons. And this is something that we as politicians need to deliver for you. And sadly, I don't think we're quite on the right track at the minute. So in conclusion, Britain has a thriving and dynamic fintech sector of which we should be proud. These new tools could offer a much better deal for consumers, but they could also leave us better placed than ever to tackle financial exclusion and to remind the public just what good financial services do deliver. So please make that your mission. Please, we need this to happen more than ever. And please work with politicians and officials to make sure the environment that you operate in is one that can facilitate that. This conference is a great part of that process, so let's keep that conversation going. Thank you very much.